Absolutely. So I'll break it into the sense of football and sports, just being a sports guy. Operators, they're more in the front side, the offensive coordinators. It's more everything that you do on the back end. So having a good fund management team as you kind of create your syndications, your funds. What can you do on the back end of those things to de-risk it?
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Jeff Lavin, is a managing director at Oberon Securities, advising sponsors and operators on real estate, M&A, recapitalizations, and private capital solutions. He's a former pro snowboarder. You can find him on his YouTube channel, Jeff Lavin. Jeff, thanks for taking the time today.
Yeah, pleasure, Dylan. Thanks for having me on.
I'd like to start at the beginning of this story. Former pro snowboarder, that really caught my attention. How does one go from snowboarding into real estate and asset management and, expanding in multifamily acquisitions and the like?
Yeah, that's a whole episode in itself, but we'll keep it at the quick 30-second overview. Yeah, so when I was a snowboarder for pro snowboarder for about 8 years, you get injured, you get banged up, you see all those awesome clips where land successfully, but unfortunately that's not always the case, and quite a bit of times your season ends early with injuries. So I had the maybe fortunate but unfortunate at the same time. I went through back-to-back ACL surgeries, started one of my own companies, a database, and expanded that out to snow, skate, surf, and moto with all the cool places and things you could do. Took an exit with that. And then slightly more than I was making at snowboarding at the time, was able to go back to snowboarding, but it kind of opened up that door of, hey, there might be something after this. Then when you have about, I had about 10 or 12 different sponsors at the time. So you get to see mergers and acquisitions and all sorts of things happening with each and every single company. I was with Monster Energy, so I was there during that transition when they went from Hanson to Coca-Cola. So I saw that kind of happen. Then I had an opportunity to start my own brand and expanded that into a holding company with about 7 different subordinate entities underneath it. And then took a carve out from 4PL with 2 of those sub entities. And then it's as an athlete, and especially this sport, when I was getting out of it and retiring, it was kind of the triple cork was the thing. Now you got kids spinning 2340s or God knows what, like 6.5 spins. That was like a whole run all together combined, and they're doing it off one jump now. So, but you get the mindset, right, where we're just addicted to progression of what's the next spin, what's the next extra inverted rotation that we could add, or what's the next thing we could create. So fast forward, I started out as an acquisitionpreneur. What could I buy and build? And then that kind of leads you into the private equity sector of what can I buy, vertically integrate, add value, and then exit that.
His family, other snowboarders who were involved in the space? How'd you like bridge the gap there?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
We're a generational family in the agriculture space as well too, and then we were early syndicators, placing that land into REITs right after the 1934 Securities Act.
Okay,
So
so this
there's
was
that going
something
on.
familiar to you.
There's something familiar, and then on my mom's side, a lot of them are lawyers and investment bankers. Those two kind of go hand in hand. And we had a cousin in New York City who was a private equity real estate attorney. I was exposed to the space, but it was more of dinner table conversations versus being in it firsthand.
Pro snowboarding was really a different path.
Yeah, snowboarding was a different path, and it's you don't retire, you expire.
Yeah.
That's unfortunately this career has been probably even better than my previous one as an athlete. What I've done here is just the accolades and accomplishments.
Do you remember
They
the
just,
the first real estate deal? The first real estate deal, was it multifamily? Was it commercial residential, like apartment complex? I know there's a lot of people right now that are interested in like industrial real estate. Walk me through that
yeah.
first deal.
So it was industrial real estate, your industrial parkways, and then self storage. The simple things where you get your triple net leases.
Yeah.
You get the overrides on those, and then self storage in conjunction on a similar. It was a similar offering where it's tied together. Um, that was that was my first. I guess we'd call it transaction in my space. So that was my first transaction acquisition.
Now, when we talk specifically about some of these segments, self-storage, industrial, right? They're seeming to be very popular now. But I think as well, one of the difficulties with that, and I would say less so industrial, just because the barrier to entry seems a little bit higher. You have to have a little bit more granular knowledge, but certainly self-storage is like really in vogue right now. So it does feel like, especially if you're in some markets, I would throw Texas in here where I'm licensed, you do have to be cautious of going into a market where there's not hyper competition and lots of self-storage existing already, right?
Oh, absolutely. I was lucky to be in a spot where it was an opportunity that just kind of popped up, more of a distressed asset play where needed a lot of capex, and I had the time and the know how to take that under, do the undertaking with it, put together a good plan behind it. We had syndicated that, and then I also had some of my own money from my exit that we had to go reallocate before tax time and go park it. So we were kind of rushing to find some things very
Put
quick.
some money in, yeah.
Yeah.
Now, when we talk, pivoting a bit here, Jeff, when we talk about, investing in larger assets, commercial deals, one of the things that I hear regularly is, and this applies to single family too, is you really have to know where you're buying and buy at the right price, right? Like a deal, for instance, if I know a lot of people right now that are buying mobile homes and RV parks. You got to
Mm.
understand how to manage these deals. You also have to know where you're buying them, right? And buy them for the right price, right? Now, I believe, are you in New York?
We're based out of New York.
Based out of New York.
Yeah, we're allowed to be free range humans, as I call it. I go to New York a few times a quarter to enjoy our lovely office space, but most of us managing directors at Oberon, we're all hybrid remote.
Are there any specific geographic markets that you're looking at maybe a lot of deals in or that you're particularly bullish on? Or is your approach like, hey, I'm agnostic to location, but what really matters is the fundamentals of the deal itself. I'm not looking at an extra number of deals in like the Sun Belt, for instance. What's your approach to finding a good deal?
I've been agnostic for the most part. Bullish is just based on where we're finding opportunities within the market. One of the things I specialize in is taking public mandates. So whether it's with the state or with the federal, and then overlaying those on top of the private offering that we create and de-risking that within the capital markets standpoint of view.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So public offerings is the term.
Public mandates.
Public
so
mandates.
That's yeah. So case in point, you were familiar last, was it 2024? We had the Eden fire in California.
Right.
Eden, and then there's several other wildfires and stuff like that. So the state of California has created some mandates to rebuild some of those areas within the Palisades, those communities, Malibu, etc. So we'll take a look at those public mandates. What can we use those public mandates for? What funds are allocated for projects like that? Then we'll go to our private capital markets where I have institutional clients. How can we de-risk this from our institutional client standpoint of view, where essentially we can make them whole, or how can we tie this in the deal to create more revenue within the security or within the fund? There's a number of different ways we kind of look at stuff like that from that angle or that standpoint of view. And then, yeah, then you have areas like Dallas Fort Worth where it's exploding too. So you could look at those as well too, where they have some of those are what's called opportunity zones.
OZs.
Where those are, they're trying to develop these areas or these new areas. Like you'll see some of that stuff out in Denver, Colorado as well too, like by the airport opportunity zone. Then in those instances, you're interfacing with a lot of folks that are, former mayors. Sometimes they're in office. So you're networking with both sides of the aisles, interfacing with those folks, and really just figuring out how you can get the community buy-in as well too in conjunction, just to paint that good story from the institutional standpoint, and where you make everything a win-win.
Yeah, I mean, you ultimately want to be partnering with the area that you're operating in, right? And I think one of the things that people often say that can be tricky is permitting and getting approvals and this type of thing. Whereas when you're working in public mandates, right, and partnering with city officials or people who are well connected to city officials, that's a different approach entirely, right? Rather than working against them, which is sometimes it feels adversarial, you're really working with them.
Yeah, absolutely. You're working with them, and you want as many of those people that can grease the wheels and be on your side as possible.
You mentioned also DFW. I'm a big fan of DFW. I've lived in Denton, which it's considered DFW, even though it's really closer to Oklahoma than it is Dallas-Fort Worth. One of the interesting things that I've noticed from being over there, and this is no shade on any other Texas market, but it does feel like the middle class and the job market is more resilient than in some other areas. And I felt like there was a mini recession that I was experiencing living in San Antonio in 2023, 2024 timeframe. I moved to DFW and I felt that was not the case there. I felt, there does seem to be, more happening for small businesses, medium-sized businesses. And that was one of the reasons why I love that market and still do.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah. DFW, it's ever growing, ever expanding. You got the Fort Worth stockyards and a lot of stuff out there. I don't see that market slowing down anytime soon in the next several years. I mean, even if we go through a bit of a recession, that area will always kind of be poised for growth. You got to look at your other supply and demand and your other numbers and stuff like that as well too, where there's a high demand of developments and projects and stuff like that out there. And a lot of these things aren't. You might be going through a recession in a certain area, but still these projects are slated, and it's not just 3-month turnaround.
Right.
It's sometimes some of these things are 3 years. So they're going to forecast everything with your analysts and your quantitative analysts and stuff like that. You're going to forecast that within everything that you're creating, within whether it's your offering or your mandate, just to weather those storms.
That's a really good point. And I've had, guests talk about this before, but I think it's worth highlighting. When you start these deals, things can change in 6 months, let alone 2-3 years, right? And so part of the risk is especially at economies of scale, you don't know where rates are going to be in 2 years, right? So if you're taking, variable rate debt and then, cost of materials, and then you can't predict that everybody else is going to be, let's say, doing multifamily ground up construction as well. And so when all of these factors converge, it becomes trickier, to operate in some markets for sure. How have you been able to manage that balancing act? And then also, do you have any advice for folks who might be looking at getting into, multifamily acquisitions and the like?
Absolutely. So I'll break it into the sense of football and sports, just being a sports guy. Um, Operators, they're more in the front side, the offensive coordinators. It's more everything that you do on the back end. So having a good fund management team as you kind of create your syndications or your funds. What can you do on the back end of those things to de-risk it? Specifically within funds, bringing in the right fund manager where they're going to have a good, it's called a reinvestment strategy. So there's a lot of things they can do to create liquidity from day one, where your project on the front end, it might not be able to create liquidity for a year or two or something like that. Your fund manager is going to be able to do that within their reinvestment strategy, recycling mechanisms to create that liquidity from day one to de-risk everything on that front end. That way you're protected. It's defense wins championships. A case in point, look at the last Super Bowl.
Yeah, I mean that's a great point, right? How often do you find, especially in your space, people, having the operators themselves become the source of the stress, not the property, right? But
Yeah,
it could be the property manager, it could be the syndication itself, right? And so it's just communication can wear a project
communication.
thin.
Yeah, communication. Or if you're looking at your assets, like we calculate everything down to the zero. As if you see two zeros in one line item, that's kind of a red flag from an analytical standpoint. Triple zeros are a major red flag as you kind of see stuff, because then it's based on assumptions. You want your factual data, as much factual data as you can have within that. And obviously, we're going to still have assumptions, but we're going to do the best that we can to predict what those assumptions are going forward. Data is your friend and your ally.
We are coming up on time here, Jeff. I would be remiss if I didn't ask you, what was the highlight of the snowboarding career?
Oh, highlight of this. Okay. Actually, this is more motivational, and it's inspirational. And it's a bit of humor. So I was out at Mount Hood, Oregon. We had just we were competing in a summer competition. Had a bit of fun the night before, some pizza and some beer and stuff like that. The jumps were pretty icy, being I think it was July, like early July. So the snow, you get that slush snow, 60 degrees. So they have to salt the jumps. Um, Anyways, I'm going in for my first run, and I go a little bit too hot. on the first jump, land it, do a 540, land, and then I go in to do a 720. I completely overshoot the first or the second jump. I go board, but don't think of it because adrenaline's kind of flowing. And it was in a jam format. That's where you kind of run up and cycle and stuff like that. So I had to take my second run. So I go do this I do a switch frontside 540 or a cab 540 as we call it. And then I do a backside 720 and grabbing truck driver, and I feel stuff running down my pants. And I'm like, oh no, I just did what I think I did. But I can stop right now, and it's happened. I still pooed my pants. Or I can go to this third jump and I can do a frontside 10, and I've never done that before. I've done 9s, but I'm like, you already did that, so you might as well just go for that. So land that on the third jump. Everything's just boots nastiness, and then I hit a couple rails. I did a 270 on, 270 off, and then board slide, went down, cut off all my gear at the utility knife, and jumped in the lake. But I got third place.
Let's go.
Here's the saying: don't let a little bit of, literally or metaphorically, we all deal with crap. Don't let a little bit of crap hold you back or slow you down.
Amen to that. Amen to that. Jeff, any way, or what's the best way where folks can reach out to you if they're interested in reach out to you?
Yeah. Oberon Securities has a great website, but also I have my own too as well. Jeff at jefflavin.net. You can find me there. And then all the various social stuff. Jeff Lavin, or the Shredneck on Instagram, but Jeff Lavin's kind of my handle all over socials, YouTube, TikTok. It all eventually ends up down the pipeline, all gets back to my phone sometime. Fastest way is usually through website or email, but yeah, feel free to find me where you're comfortable finding me, and we're happy to connect with you, myself and my team.
Jeff, thank you so much for joining us today. Thanks for taking the time.
Yeah, man, my pleasure.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.